Hello guys, this is Obi. I do have a group of individuals in here and we are going over SMTs, the forever model. If you guys are interested of learning the forever model, you'll just go down to the forever model under advanced and kindly watch the videos and back test and forward test until you can understand the model and how it operates. Now I am about to show these beautiful people how to find the setup and execute. Now the first thing you would do, we will look for fair value gap, and what we want to do is have all three assets. We have NASDAQ, we have ES, and we have US 30. Now what I'm gonna do is mark up gaps. Now we have completed step 1 of the process, is finding what is called a fair value gap, which is a 3 candle pattern. We have the first candle that created the high, the low, then we have the second candle that traded away from this low of the first candle, created a low, close, then we have this third candle that created a high, low, and then close. It takes 3 candles to form a fair value gap. And as you see, as I draw the box, you can see the gap in between the first and second the first and third candle. Now, since we got the first step, the first thing we need to do is find SMTs. Now, as you see, we had SMTs here. We had a lower low, lower high. Over here we have a lower high as well. And over here we had a higher high. This is called SMT's divergence, where one asset in time, as you see, as I'm pointing at this high, it is 6 a.m. It is the same high in YM, ES, and NASDAQ. As I move to the right, you see that this high is at 8 a.m. So it is sync in time indeed. This is SMT within a fair value gap. So the next thing you want to do is go to the lower time frame, which is the 5 minute. And wait, let me go back and do bar replace. I don't have to find this in price. Let me go to the 5 minute. And is this highs here. Alright, let me make this a little bit clean. Make this a little bit clean. Alright, so you see one is creating a higher high, one is creating a lower high, another one is creating a lower high. Now what you want to do is find out which of the candle that took out a short-term high. You'll see on NASDAQ, as I select this high, the short-term high is pointing at the candle that took its money. So it's literally snitching on a candle. And it's pointing at this up candle. This up candle, once this candle was open, it created a low. It created a high that took up the short-term high to create the SMT, then the close. So we want to utilize this up candle. Let's do the same thing on ES and YM. You'll see that this short-term high is taken out by this up candle. And also, you will see that this candle high was taken out by this up candle as well. Right? So the next thing we want to do, since we have identified that this candle was the one that took up the short-term high to put in the SMT, we want a change in state of delivery. What is that? A change in state of delivery is when the opening of that candle, of this up candle, we want a candle to close below it to then form a order block. As you see this candle here close below it, so we can enter at the change of state, put our stop above the SMTs, and aim for a 1 to 2. Same thing when it comes to this. We got a closer below. Over here, we got a close below. So the way you will enter this trade is you will enter at the change in state. You'll put your stop above here. And then you will aim for a 1 to 2 and get in and get out, or aim for a 1 to 4, which I normally aim for. And same thing here. Enter at the change of state, put your stop above the SMT, aim for 1 to 4. And same thing here. In and out. In and out. Just like that. That is a 3-step strategy. You first look for a fair value gap. Look for a fair value gap. Look for SMTs. You go from the 1 hour to the 5. You look for a change in state, the candle that took out a short-term high, and then you enter at that change of state. But you don't have to limit yourself to only the 1 to the 5 minute, because the 1 hour aligns with the 5 minute. The 5 minutes aligns with the 30 seconds. If you want to get really crazy in price action, as soon as you mark these levels on the 5 minute, you can go in 30 seconds, see if you can find something where it can reduce your risk. So we delete this. What do you see? We see fair value gaps here. We see volume balances here. So price can potentially trade up there if you want to just settle for this fair value gap right here, which is a SIBI. You can wait for price to trade up there. If the risk is too much for you, wait for price to trade up. When price traded up, we get this series of up candles. We get a close below it. Then this candle right here wicked it and sold off. Never came up to that stop. If we mark up the change of state right here, you see that this candle right here closed below it. Now we break in time frame by time frame. We get a change of stake on the 30 seconds. Within a 30-second SIBI, we get series of up candles. Now it becomes an order block. This candle opens, tapped you in. Now instead of you entering down here, now you can enter right here. You can either put your stop below here and trust that it won't take out that high, or you can put it above the SMTs. Now you just went from a risk of having a stop loss of 147 to 108. But if you feel that it's not going to come up to the SMT highs, you can put your stop here and cast the same trade going down. Caught the whole move going down. That's over 800 points. That's ridiculous. That's enough to feed a lot of family. So that's one example. Now, let's see if we can find another one. Let's go back to that gold trade. If you go to the weekly, I'll call this out before it happened 2 weeks ago, I believe. Over here, it had a weekly fair value gap. That's step one. Step two, we look for SMTs. That's step two. So since we got step one and step two, we go to the line time frame, which is the 4 hour. And as you see, as we are looking at price, you will see that this down candle is the one that took out the short-term low to then put in the SMTs. So basically what I want to see is this opening of this down candle that took out a short-term low to put up the SMT. I want a bullish candle closing above the opening of that down candle to then form a potential change in state order block. So we got the change in state. The only thing about this, as you zoom in, it created a volume imbalance. It didn't close above. It did close above, indeed, but it gapped. And when this 4 hour candle closed, it closed above here. I was like, okay, I don't see it retracing down here anytime soon, so let me just go on the 1 hour and see if I can catch some SMTs. As it's buying up, I do believe it's going to take out the external liquidity high, which it did. But when price was here, I said I want to go on the 1 hour and see if I can find a trade. So let's go on the 1 hour. So currently we are in the 1 hour time frame. So as price is trading away, I said, I don't want to chase price, so I'm gonna wait. So I went ahead, I'll draw another fair value gap. Now we got step one completed. Now it's time to find step two, which is SMT. We had gold creating a high, higher low, and we had silver creating a lower low. So gold created a higher low, while silver created a lower low. And as I point at this low, you will see in fact that it's the same low at 3 a.m. As I point at this low, it's the same low as 7 a.m. So it's sinking time. Now what we can do is go from the 1 hour to the 5 minute, because the 5 minute aligns with the 1 hour. Now, when you see price action like this, which I don't like in my opinion, right? Which I don't like in my opinion, the candle that created the S&T is an up candle. The same thing with this time frame. It's an up candle. So anytime I see this, I know that my mentor know that time is fractal. So why should I limit myself to a 1 hour to 5 when I could just go down to a time frame that's lower, since time is fractal, right? Because if this is a 5 minute candle and I know that it takes 5 1 minute candles to make a 5 minute candle, why not just go to the 1 minute? So I went ahead, let me use the replay so I can come back in time. So I went ahead and went to the 1 minute, and I saw the same price action but more details. So I saw that we had this short-term low getting taken out with this down candle right here, right? Now this short-term low created equal lows with this actual candle that took out this short-term low. So I know that there's money behind. There's a lot of liquidity here. This candle opens, takes out this low, and takes out multiple lows, creating the SMT, right? And then it started buying up. So I was like, okay, I want to use the last down candle as the order block. So I went ahead and draw the line, waited for price to tap the order block, and as you see, price is trading away. Now most people will say, oh my god, I'm missing out of a trade, let me chase it. Yes, you can chase it if you want, but knowing who I am as an individual, I'm gonna wait for my chance to then let me get into the trade. Now this order block is 330.59.1, right? So I'm just gonna wait. As people are trading this right now, right, from the order block all the way up here, it went up by 32 points, right? So I'm just gonna wait patiently, and I am going to enter right here at this order block. I'm going to put my stop below the SMT, and I'm going to wait to see if I'm going to get tapped in. So let's play it. I get tapped in. I get tapped in. I'm going to drag this to the side, and let's see if it's going to play out. And boom, I'm in and out. And if you guys want proof that I took this trade, okay, I'll show you. What do you see here? Is 3059.1. And as I go back, what do you see here? The order block is 3059.1. Oh, you think I photoshopped it? No worry, I got the video too. Good example. Other trade I took was the trade before Trump paused that 30. He put a 90-day pause, and it pumped after I closed my trade. We had S&Ts with ES. ES was creating a lower low, while NAS was creating a higher low. I waited for this up candle to close above this down candle to create a order block. Price then came down, tapped me in the entry. As price traded away, it came back down. It created SMTs. ES created a lower low, while NAS created a higher high. And as we go back in time to look at that price, so we had SMTs right here, and we had SMTs right here. We also had SMTs here, and we had SMTs right here. So I based it on, I believe it was an hour chart. No, I think it was on a 15. Yeah, it was on a 15. So I saw this fair value gap here. There was no fair value gap here, which is fun. I went to the 5 to the 1. And I was looking at this price action, but I saw that we swept this low, and I was going to use this order block. But I was like, you know what? I just wanted more more confirmation. Even though I can enter right here this order block and put my stop here, I just want to feel like this trade is gonna play in my direction. So what I did, I said, you know what? I'm gonna go into the 5 minute. So I went to the 5 minute and I saw that this up candle closed above this order block. So I was like, you know what? I want to get a change of state with this 5-minute order block. So when I saw that, I was like, okay, let me put this ahead. So when I saw that, I was like, okay, we are trading up. We got this bullish order block. When price comes back down, I'm gonna take it for a buy. So I took it for a buy, and then it gave us this one big up candle trading up. I was like, oh wow. And then it traded back down, creating a SMT with ES. As I point at this SMT, you see that it was indeed a lower low, because this low was at 4,997.50, and this low was just 50 cents lower. As I point at this low, it's at 17,265.25. As I point at this low, you will see that it is indeed a higher low, while this one is a lower low. Now, if you really want to get too crazy, I took this in E-mini macro, because I didn't. The risk was too large for me. I enter here. I put my stop here. Now, if you trade E-mini with this stop loss, it is a lot of risk. But I could have waited to see if this SMT was created. I could have got in again, but I didn't want to do that. I just literally let the trade play out. But if I did, we got this SMT within a 5-minute fair value gap. Alright? So since this is on a 5-minute, I can go from the 5 to the 30 seconds and do the same thing. Now you see that this down candle, the short-term low, was violated by this down candle right here. This down candle is the one that took out the short-term low to then put in the SMT on the 5-minute. So I want to get a candle closing above it, above the opening of that down candle that took the short-term low to put the SMT. And I want price to come back and retest it. So if I literally went on to 30 seconds, I could have caught another entry. Very precise. Ensured right here in the opening of the candle, put my stop above the SMT. Aim for a 1, 2, whatever I want to target. If I want to use the standard deviation, I put it from the manipulation leg to the high. I can aim for the -2, the 3, or whatever I want, or aim for the original TP as my first entry. And let it play out. Play out perfectly. And then Trump tweeted and made the market go crazy. But yep, that's how you find SMTs. Really simple process on how to. First, you find fair value gap. Second, you find SMTs. Third, you find the change of state, and then you enter. The trade I took earlier today before Top Step decided to close my trade. Let's go here. Alright. And let's go to the daily. And what I saw is that we had, I don't know what to call it, but we have double volume balances. So I know that price definitely needs to trade up there. Right? So we had a lot of volume balances up here. And price, we had volume balance right here as well. So I know price needed to come up here. And I was anticipating as the weekly profile, I said potentially we can close above here, then once they would create the high of the week, and then maybe Thursday and Friday would sell off. Now as I go to the 1 hour, as I have my zones, I said trade it up to the first volume balances and then started retracing. I said okay, let me mark up my gaps and see if I can find some SMTs. Cool, so this is the volume balance. And I put this in the back. I don't want it to cover the price action. There we go. So, let me do the same thing here. Awesome. So, we got the volume balances, we got the fair value gap. The next thing we have to do is find SMTs. So, if I use this low here of this first gap, we can maybe find potential SMTs. If I use this low of this gap, you will see that all these assets will just potentially create a higher low, higher low, higher low. So let me use this low of this first gap. And as you see, we have a lower low, we got a higher high, a higher low, and we have a higher low. So we got some SMTs. So now what we can do is go from the hour to the 5 minute. And since we base it off this fair value gap low that created this gap, we can delete this one, and this one, and this one. Now we can go to the 5 minute. So I saw this price action here, and I told my group that, hey, do you see that this down candle is the one that took out the short-term low? They all agree and say yes. So I wanted to see a candle closing above the opening of this down candle to then form a order block for me to take an entry. Right? So as price traded away, we never had the retest until it came down to then activate my trade. Not only that, it came down to this order block right here. But I was not paying attention to this order block here. I was paying attention to this order block. So I wanted to see price action a little bit cleaner. So I went to the 5 minute to the 15. And you see that it's just a 15-minute order block. That was my entry. I took it here. I put my stop below here. And I was aiming for the volume balance. Obviously, I trade with top step. Top step closed my trade. And then when the market opened, guess what happened? It gapped up to that volume balance. And if you don't believe me, if I took this, alright, let me show you. Because I record all my clips, all my videos.
Listen. I can't trade minis on this shit.
Then they closed my trade. And then when the market opened, it gapped up. If I had a personal, I would have copped all that, but it's cool. But yep, that's all. That's how I trade SMTs with the Forever model. If you want to learn it, you can definitely join our server in the description. And yeah, it's literally a group of individuals sharing the same strategy. I have the Forever model videos, which is Sniper. All credits go to him. And he will teach you how he breaks down a trade step by step. And that's how you do it. Right now, I am combining the Forever model with quarterly theory. So right now, I am developing a model right now, which is the Forever model 2.0. And once I'm done developing that, I'll share it to the public. Alright, ciao.